All right. Recording's rolling. I'm gonna go ahead and get this started. Again, thank you to everybody who had joined here on a Tuesday night. FOMC is tomorrow. We know that we have a lot of high impact news across a lot of pairs actually this week. It was posted in lessons. I can go ahead and show it to you guys as well. But understanding that this is going to bring a lot of volatility into the market as well as manipulation is what is going to be the largest factor. And let me talk about one thing for a second here as far as news goes. Because in these certain instances, right, where you have 80-90% of the world, whoever it is, right, the US trying to figure out a bias for a direction, for a certain narrative, certain chart, whatever it is, right? Certain asset. And they want to be in first, right? They want that FOMO. They want to be in first. We understand this as a retail trader. We're not looking to be in before everybody else, right? We just want our setup. And then once our setup is given, we are in and out, no questions asked. But understanding that these events, right, allow for directional bias to sway one direction very heavily, right? As in inflation numbers coming out higher, right? Or certain instances like that. And then you look at the charts and you're like, oh, shouldn't it be going down because inflation rates are going up? And then it ends up going up, right? And you end up getting taken out of your bias. You end up getting stopped out. You end up losing profit, right? And these are the scenarios that we don't want to get caught in because we are just either longing or shorting based off of what the world is telling us, right? What everyone else is saying, we're just following them, right? We understand as traders 90% fail. So if 90% are telling you that one direction is this, why would we be looking for that direction, right? That's just the basic little proof right there that you can understand and get into these situations, right, with the algorithms and with the institutions, right, once that comes into play. And we don't have to worry about the retail liquidity, right, the uninformed liquidity trying to find a bias, trying to catch a top, trying to catch a bottom, because we only have our setup. And once that comes to play, then we are good to go. So a lot of the times during these FOMC or high impact news days, I wait for a liquidity rate, wait for some type of manipulation, and then the break of structure, right, with impulse. And then I look for the either demand or supply candle before that, right? And then we look for the confirmation within that zone, and then we can take it to either the week high or the week low within that structural liquidity there. But we're going to go ahead and do some market sentiment today. We're going to go ahead and look at Bitcoin. We're going to go ahead and look at ETH. We'll talk about how we've been literally looking at the same exact direction. Direction has been following to the T since August 20th. On Ethereum, we'll talk about the GBP NZD play that was posted as well in lessons. We're going to talk about the narrative for that, how it came to play, how it makes sense, how I'm going to look to play it. And then we're going to also go into US 30 directional bias for the week as well. I focus US 30 over NAS and ES. I do like NAS personally, not so much ES, but 30 over everything. It's my personal favorite. So let's get right into this right now. So understanding where we're at for Bitcoin, remember, let's go back to the monthly, let's go back to our higher time frames. What are we seeing here, right? We see our large move to the upside, we see the break of structure to the downside, and then we see the large move to the downside, right? We are coming into a possible monthly fair value gap as well as sweeping these equal lows, this liquidity that we have created on this move to the downside right here. So we can see an equal low right here was met with an equal low right here. They were drawn out flat, right? And this is what we are resolved with. So from a monthly perspective, our monthly draw on liquidity is still looking to be downside. I don't see a monthly break of structure to the upside, right? Nothing that tells me price can come up here yet. Nothing is there yet, okay? So now let's go to the weekly chart. So for a monthly pullback, right, into these areas that sponsored breakdown, we would need to see a weekly break of structure. Has that showed yet? Not quite, right? We saw a high and then a low, and then we saw a move up. Was there much impulse on this move to the upside? If we look on this weekly chart right here, do we see any imbalances or anything that was left behind, right, for price to come back into, pick up those orders, and then move from there? Let's take a look. I don't think so, right? We don't see any imbalances, any impulse moves to the upside that allowed, right, demand to be introduced within this push to the upside right here. So all of this did was build up that liquidity. We can see the equal lows that we are creating right here as well, right? That trend line liquidity to the upside. Once we did that, we mitigated that fair value gap, right? Took out the highs and then broke structure to the downside. So if we look at it from a weekly chart, this low that caused this high, right, was immediately broken to the downside right here. We can see this little weekly rally-based rally right here, and then the break of structure to the downside, left a fair value gap, right, left your displacement candle. We see the delivery up into that, the lower high that is formed, and then we see the move after that, taking out the week low right here, right? So still on the weekly and still on the monthly, I'm still looking for that draw on liquidity at 17.5 overall. This is good, though, that we are doing this in discount, that we are starting to accumulate in discount, meaning if I go to a 3-day chart or a lower time frame chart, right, this is your low that caused this high right here. We're within this range currently, taking liquidity, creating supply and demand, right? But we are in discount, right? If you notice on our first half, we came up into discount, and right after we came into discount, we saw a push down, right? What does that do? That's going to now bring retail short liquidity into play, right? Retail who had shorted down here, shorted right here, shorted down here, right? They are coming into play at this point in time. So what this does is now allow the buy side liquidity to be built up at these highs within these areas. But we need to understand again that from an institutional perspective and from a market structure perspective, we are still bearish overall. So seeing downside is not something that should be uncommon or something that should be very surprising, right? Within these scenarios, these past few days when we've been seeing downside on these moves to the downside, that shouldn't come as a surprise, as overall, right, our higher time frames are showing that bearish structure overall. So on a 3-day chart, right, we still don't have any bullish structure. We are taking out lows, which is very, very good, starting to manipulate these lows. I do see us possibly, so I drew something on my green chart, right, that was looking something similar to this. We were at this area right here. I said we were going to come down, go like this, come up, create more short liquidity, and then come to the downside, and then come down to this area, right, come down to that 17.5, fill in that fair value gap, as well as take out all the previous longs from literally years, right? And then we see that actual move to the upside. I was looking for price to create more short liquidity, right? With something looking like this, we ended up taking out that short liquidity instead and creating more, right? With this large move to the downside right here. So that's completely fine. Sentiment is still coming into play, right? The direction is still coming into play. We still have that draw on liquidity to that 17.5 that we had talked about over here, that we had talked about over here, that we had talked about over here, right? Overall, we are still looking for that monthly draw on liquidity until our higher time frames show us differently. The weekly has not broken structure to the upside. The monthly has not shown, right, any sort of break of structure to the upside. I would want to see over 23,340 for the continuation into these areas and or for continuation overall. But still, looking bearish personally as far as this goes. Longs will come soon. I do believe longs are coming very, very soon. As again, right, we are staying in discount, taking out lows, taking out highs as well within these areas, and we are starting to leave highs on these drops to the downside right here. What does that start to do? Create that buy side liquidity for us to break structure and then grab all of it, right, once that occurs. But right now it's still not there, so I am still currently looking for downside into the 17.5 draw on liquidity that we were talking about weeks and months ago. So with that being said, that is Bitcoin. I can go ahead and do a lower time frame analysis as well, but personally, right, I still don't have it. Let's actually talk about what happened right here, which is pretty important, something that I wanted to show you guys. But on our recent stream, we talked about this area of demand. We said if we came into this area, broke structure to the upside on a daily chart, right, then we could see the continuation past this weak high and possibly past this weak high right here. This is not technically a weak high, it's a strong high as it caused a new internal low, right? But we still could see the continuation into this structural narrative from this break of structure to the upside. And then the confirmation of the zone, if this were to break upside right here, right? If this candle were to break this structure point right here, then we could have seen that weak high taken out, possibly mitigating supply here, and then continuing to the downside. But instead, we disproved that demand narrative, meaning when we came into these areas, that redistribution that occurred on lower time frames, so let's just go to an hourly chart here. We came into this area, created this buy side liquidity, right, and then broke structure to the downside internally. We can see the M that is in place here. So we came up, made a high, broke structure to the downside once, broke structure to the downside twice. What sponsored that? Our drop, base drop, right, our area of supply. Then we saw price raid those highs, take out that buy side liquidity, and continue to the downside. So this area of demand, right, was now invalidated on this move to the downside. So if I were to bring this back right here, right, if we still had this demand out like this and we were looking for areas right here and we play this out, we're looking for confirmation, right? Looking for a break of structure upside does not give me that. What does it instead give me, right? A break of structure to the downside. So what do we talk about as far as how that goes? The disproval theory. I've now been disproved on my break of structure to the upside. I've now been disproved on my narrative to the upside, right? From this break of structure to the downside right here. If we go on a 4-hour chart, we can see how clear that is, right? How clean that is within these areas right here. If I go on the 4-hour chart, look for the 4-hour breakdown, right? Occurred right here. Here's your displacement candle. Where's the candle before that candle that broke that structure point? Lies right here. Let's go ahead and do some lower time frame analysis to take this zone lower from the 4-hour to now the 1-hour. We can see these clean areas, right? Of drop-based drops, areas of supply for price to come into. We see this displacement candle to the downside here. I see this clean candle right here. If I look on the 15-minute, we can see that same exact area as well. So if you wanted to do some refinement, you could take your zone, right? Draw premium and discount. This candle is within premium of this zone right here. I do like how this looks, so we'll draw it back like this. Right, this is the most recent supply, remember, that violated this low or this demand zone to the downside. This was your break right here, right? And then we saw the full confirmation to the downside on this move right here. So now that that has occurred, I've now been disproved on my move to the upside. I now have an area of supply to look to play if price comes back to it, right? So let's talk about what happens here. We come down, liquidate lows, and let's watch the replay mode at this point in time. So now that we start to move higher, right, liquidate those lows, we're starting to move up into those areas of supply that sponsored this move to the downside right here. I've been disproved on my longs, so I now have an area to short. What happens, right? We come into that area, and then we are starting to react off of that. We see the final continuation to the downside, right? From that is formed, and now we are sitting here within this zone of time, right? Starting to create that buy side liquidity as we're moving down. Personally, I still have not seen that break of structure that I'm looking for yet. That draw on liquidity is closer than me looking for an impulsive move to the upside. There is no break of structure on the 4-hour, not on the daily yet, right? We are still bearish overall. So as far as this goes, I would be looking for shorts into this area of liquidity overall. The R&R isn't really that much there as far as the move from here to here. So personally, I would rather wait for longs. Once that structure is being shown within discount of these areas right here, but we talked about the monthly, the weekly, overall what we are looking for. So with that being said, right, we can see how we are disproved within our most recent price action. We can see how that draw on liquidity was present, and we can see how now price is moving. So with that being said, I'm going to go ahead and go over to ETH now. We'll talk about the analysis for that, how we were looking at it since August 20th, and it's literally followed to the T as far as the sentiment goes. All right, move up into here, and then we saw the move down following. So with ETH, let's go on our higher time frames again. Still break a structure to the downside, right? On the monthly chart, we saw one move to the upside right here, and now we're starting to see some type of downside. So overall, we're still bearish on the monthly. The draw on liquidity, right, is that 1915, 1975, those lows that we have. So now from the monthly to the weekly, again, we had some type of change of character on this move to the upside right here. We can see a high, a low, and then that break to the upside. We left imbalance, right? We can see the weekly imbalance that we are currently in, currently mitigating. I believe Castro was talking about this as well, this area of weekly imbalance. I had a 3-day imbalance. Or no, a 2-day. We have a 3-day imbalances here as well that we are currently filling. And then I had this, I believe it was a 2-day imbalance. Yes, this zone right here, this entire candle, I do like as a possible demand candle for moves to the upside. So with that being said, right, I'm looking for the continuation to the upside if it is shown. If it is not shown, right, then I will continue to short into that retail or into that liquidity below. So these equal lows that we can see right here from this accumulation on this break of structure to the upside. But overall, right, I am personally more long bias as far as moves to the upside, but until it's there, I'm not going to take any. Until it is there, I am not going to take any. So I'll be continuously shorting until that long bias is shown, right? Until I'm disproved to the upside within these scenarios. So we are coming down, currently filling this 2-day fair value gap, possibly filling this one down here as well, and mitigating this area of demand, right, that caused this move to the upside right here. So if we can confirm that within those areas, right, with a break of structure, then we can catch our entries and catch the continuation into weak highs, into supply zones, right, and into the overall supply that we are looking for. But right now it is not shown, so I'm still looking for downside. We can look right here, look at the daily chart. We saw a drop base drop, still showing bearish behavior, right? 12-hour hasn't shown any bullish behavior yet. 8-hour, no bullish behavior yet. 6-hour, none yet. 4-hour, none yet, right? We could just keep going down at this point. But until those higher time frames are shown, price is not going to deliver into those areas. You can sit here and call speculation and call it whatever it is, right? But until it is shown, I'm not looking to take it to the upside. That's just as simple as it is. I will continuously take this downside until disproven, right? But if we can show the confirmation within these areas, then I can look for those moves to the upside following. So with that being said, that was ETH. I want to go over and go over the GBP NZD narrative. Probably after this, we'll just do US 30 real quick, and then we will get into GN, what I'm looking for, why it makes sense. All right, so with that being said, let's go ahead and go look at US 30, look at where we're at right within this point in time. So we had an institutional candle, right? 4-hour institutional candle. You can go ahead and look on the daily, right? This wick down that we saw right here. We're currently mitigating that institutional candle from this low that caused this high. So if we wanted to see demand creation after the first mitigation, right, of the institutional candle. So first you have your fair value gap, right? And then you have the mitigation. So we now need to look for a break of structure to the upside following a liquidation, right? So there's a few scenarios that I'm looking at right here, right? We can see that we're starting to create some buy-side liquidity. We could see that break of structure to the upside into those price deliveries overall. But still, for US 30, I am liking how this setup is coming into play. When we came down into here, right, we created more equal lows, and then we created them as well over here. What that did, right, was get retail long bias, believing that they're going to take this to the upside. Maybe they saw this as support, right? Whatever it was, maybe they saw this as a flip. I have no idea what they have, right? But they see this, they see support, so they long this, right? They long this, and then they put their stop losses underneath these lows right here. So within these certain instances like this, I can see the buildup of that sell side liquidity, and I also have an area of demand, right, before that break of structure to the upside overall. 4-hour institutional candle, right, that we see right here. We saw the break of structure to the upside right here, that rally-based rally that occurred. And then we now are watching the action within here. So again, right, if we go back to the 12-hour, we look like we have broken structure to the upside, but we came down, wicked the low, right? So it still hasn't been shown yet. Again, same scenario on the higher time frames, 8-hour, 6-hour. Still similar scenario, right? We saw this impulsive move to the upside right here, but what was the job of that at that point in time? Let's take a look, right? Redistribution, drop base drop, creates supply, right? Here's your candle before that placement candle to the downside right here. We can go on the hourly and take a look right here. Here's our M, right? Break a structure, double break a structure. And then we saw that delivery into these areas right here. Break a structure to the upside, demand creation into that supply candle right here, and then a new low was created. So again, until that break of structure to the upside is formed, I'm not looking for those longs. But overall, I do like how we are starting to squeeze within these areas, squeeze and discount, squeeze within areas of demand, right? And starting to leave highs as well. Very, very, very clean price action that I'm starting to see on US 30 here as we start to move forward. But with US 30, that's as simple as it is. A lot of these long scenarios, right, aren't going to come into play until it is shown. But I am more long biased than I am short biased, especially for FOMC, and especially for the rest of the week. So once that is shown, right, we'll look to take those trades to the upside. We can go ahead and even actually look at XAU as well. Similar scenario, still accumulating, right? Starting to leave highs. We can see these clean highs that we have right here, but until that long bias is shown, we can't take it all the way up to those 712 areas that we were talking about before, and then possibly, right, our areas of supply overall within 1778, and then higher if it is not shown yet. So with that being said, right, looking at XAU, lower time frames, we had a 4-hour break of structure to the upside, came back down, showed an hourly one. We're still holding that demand that had caused that move to the upside right there. So on the hourly time frame, right, we can see we're creating buy side liquidity as we're coming down into these areas. I would be looking for a raid to the downside at this point in time to take out all of those early longs, right, or late longs at this point in time that are trying to get into trades. Once that happened, I would wait for the break of structure to take it up into those areas of supply that had caused the breakdown overall. XAU, pretty clean, right? But I wanted to go over GBP NZD, the narrative for it, why it makes sense, right, and how we can look to take a trade off of it. So with that being said, looking at GBP NZD, all right, we have to understand the market structure. So take away the wicks at this point in time. Try not to put too much effort into them from the weekly chart, right? From that perspective, as mainly they are just liquidity rates, right? We can look at the bodies for where that structure break occurred and where we can look to possibly take it. So understanding that we are bearish, right? From a weekly time frame, even a monthly time frame, right? Monthly time frame bearish, came down over here, right? And then we broke structure to the downside. Again, we are starting to mitigate that candle as well. So now on the weekly, we can see this move to the upside right here. Sorry, there's a lot of TA on this, but understanding that right here, right, we see this push up into the supply candle right here. We're taking out these highs from a weekly standpoint, right? All we are doing is mitigating the weekly breakdown, but it looks like a break of structure to the upside, doesn't it, right? From this high that caused this low. But if we take a deeper analysis into this, right, and really understand the highs and the lows and the market structure that we have right here, from this high to this low, we actually created a higher low. So we didn't create that new low yet, right? So within these areas, this is easily a weak low to the downside, right? If we can break structure to the downside. Meaning on the daily, this low would not cause a new high if we broke structure to the downside. So these lows would then be taken out. That would be that next delivery overall of where we could look to take it, right? So this was your start of that breakdown. You can see the entries on this move to the downside right here. After that occurred, right, we came back up into that area of supply. We have now liquidated these shorts to the upside right here. Once that happens, we're looking for that delivery, that break of structure to the downside with displacement, with volume to look to take this to the downside into those areas of sell side liquidity overall. Literally as simple as it is, right? This is what we're focusing on here. This move to the downside, we're looking for the lower high. And then we're looking for the continuation to the downside. So within this area is where we are looking for our confirmation. So again, right, impulsive move that broke structure. We look for the return into the area that sponsored that move, and then we look for the confirmation within that zone. That's going to be in the form of Wyckoff, right, market structure and supply and demand within these areas right here. So with that being said, right, to keep it simple, we can look at here and say, okay, this high to this low, right, draw this out. Premium and discount, we came back up into premium, right? We rated all the highs. So now if we break structure to the downside, then I can look for that continuation to the downside. Or, right, if we create buy side liquidity and just continue to come into these areas, end up liquidating these lows, right, and then break structure to the upside, I'll be looking at this as more of a reaccumulation than a distribution when we come into these areas. But overall, we are still having that bearish narrative, right? That bearish structure within this certain asset right here. And I would be looking for the continuation to the downside. So I want to go over and understand keeping it as simple as possible, right? It's literally a 1, 2, 3 step analysis that we are looking for. The impulse, right? The return back to what sponsored that, and then the confirmation within that zone. That's what I'm looking for every single chart, every single type of analysis that I look to take, right? And for the amount that I'm looking to play, right? For these instances where it's higher time frames like this, with entering on lower time frames, and this is something that I hadn't talked about a lot with smart money concepts or with these institutional concepts, and how I really trim, right? How these happen, why this makes sense. Because within these scenarios where you're trying to play a weekly time frame, obviously, maybe if you're on a funded or whatever it is, a lot of the times this swing to this area is very difficult to manage, right? Entry here, TP here. It's very difficult to manage. So how can we begin to take relative take profits within these certain instances like this? So we talked about this impulsive move to the downside, right? We talked about the push and the delivery up into these areas. So now I want to see a weak low formed within these areas right here, meaning I want to see a high created, I want to see a low created, I want to see a new high created, and then that low broken to the downside, right? What is that going to do? Show me the supply introduction within these areas. And then once that occurs, this low is going to be my first take profit. And let me tell you why as well. Because, right, when we come into these areas, create that lower high and start to continue downside, if we don't break this structure point or to the downside right here, right, this area of demand that had caused this push to the upside right here, we could easily see a reaccumulation, right, and the continuation to the upside that can easily occur. So if I find my confirmation, right, from this break of structure to the downside right here, once we come into these areas, we have our area of supply, right, that had sponsored that break of structure to the downside after this first confirmation. Once that occurs right here, I am now entering the short. Right, stops over the zone or stops over the high. And my first take profit is going to lie at this weak low right here. This has still allowed me, right, everything that I am looking for. I still have the confirmation of a supply zone within a supply zone, right? But the supply zone's job was to only bring price right here, right, for price to break structure to the upside and continue to the upside within these scenarios. This is how we can start to maintain relative take profits. So let's say this was a daily chart, right? Daily broke structure to the downside. I have now entered within daily supply and I'm looking to target the daily week low, right? If that occurs, and then now that that happens, right? And if I get a structure break to the downside, then I have the ability to hold for longer. So now that I have my first take profit within a relative area, right? Within an area that makes sense, within an area that will allow you to manage risk, right? Because now you can take off the, if this was a 3-to-1, right? Take off the 3-to-1 right here. Take 50% of that. You've just banked 1.5% on your move right here, right? So you're still holding for that swing. You're still trying to get that 10%, that 15%, that 20% on your account. But you've already booked your 1.5%. You are risk free at this point in time within minutes, hours, right? Whatever it is. But with using this area of institutional analysis where we can go for higher time frames to lower time frames, this is going to allow us the ability to take profits much sooner, right? Within these areas. So with that understatement and understanding that, I just want to give you guys a little relative take profit think right there. What we are looking for, I want to go ahead and look at Dixie too. And then after that, we can look at some sentiments if anyone has any charts or anything like that to send out. Anything they want me to look at, I'll go ahead and take a look at those. I'll go look through questions. I don't think I see any right now, which is completely fine. But with that being said, let's go ahead and jump into now Dixie. Right, again, still showing that bullish narrative overall. Monthly, still very, very, very bullish. We just came up within these areas. We are possibly coming into areas of supply, right, that had caused these lows overall. We could start to see some type of downside on Dixie, but until that is shown, I am not looking for that delivery. We can see this reaccumulation that had occurred within these areas. We saw this high, this low created, and then this push to the upside right here. Let's go on our lower time frames. Understand how that made sense. Understand how we could have caught that within these scenarios. So if we notice within this range right here, this is my lowest low that caused this highest high. So if I take replay mode, draw this back on a 4-hour chart, right, this is my lowest low that caused this highest high. So let's go ahead and draw it out. So now this is our range. So if we wanted to try to catch a reaccumulation, right, we understand we could create a higher low in here. If we still create that demand, right, then we can see that continuation overall. So on the 4-hour, we can see this. On the 1-hour, we can see this within these scenarios. So we'll look for price to come down into discount, liquidate lows, break structure to the upside for the continuation overall. So if we go back to a 4-hour chart, we can see the highs were ran. We can see 4-hour structure breaks upside here, and then we see continuation to the upside. So Within these scenarios, right, we thought we had a 4-hour break of structure to the upside right here, looking for the hourly, right, when we come down into these areas. So we saw the move up, actually just mitigated this area of supply, right, and then delivered into those lows. After that occurred, we broke structure once, broke structure twice, came back down into that area that sponsored that move, and now we saw that move to the upside overall. So we know that we are still bullish, right, and we can still create that higher low if that market structure is still being shown. We still created a higher high, created a higher low, continued to the upside. There was no break of structure. All it was internal, right? What does this do? This gets people to get into short trades, right? Try to take this to the downside. And instead, they are now the reason that price is moving to the upside, right? They are the ability that price is delivering into those areas because they are putting their stop losses over these highs, right? Maybe they shorted it right here. Maybe they shorted it right here. They're putting their stop losses over these highs because they don't want to be wrong, right? Within these scenarios, they do not want to be wrong. That being said, that was Dixie, still looking bullish, very, very, very bullish. The delivery into that FOMC coming in tomorrow with ETH and with Bitcoin. I do believe that we could definitely see a relief pump soon within these areas, just how we are acting, but still, right, that very, very, very bearish structure as far as the narrative within these areas. How price is moving, how price is delivering down at these areas of discount. We are starting to create a lot of buy side liquidity. This is very, very clean. But this is, we notice this as it to be there, right? We notice it as it to be present. And once that effect comes into play, meaning once we get that break of structure, then we can put them into play. This is going to come with imbalances as well, right? Because a lot of the times, a lot of traders will see an imbalance, right? They'll see things like this, and they'll mark out literally every single zone, right, that they have, every single supply zone that they have, all the way up or all the way down, right? If it's demand, whatever it is, they'll just mark out zone after zone after zone, and expect price to mitigate and continue to the upside or the downside within these scenarios, right? Meaning, if price were to come up into these highs, right, and then break structure to the upside, they've now been stopped out of their trades, but they don't want to be wrong, right? So they're still holding it. So where are they putting their next stop loss? Over this zone. Where are they putting their next stop loss? Over this zone, right? They're just going to continuously short as price comes into these areas of supply and still continues to create higher lows and higher highs within these scenarios, right? We need to understand that we do not need to be right. We just need to follow the chart as it is, right? Follow the trend as it is coming into play, so we can look for that continuation. We weren't looking for longs until it was shown. Was there a long call out when we came into these areas? No, there was not. Why? Because we were still bearish, right? This is these scenarios where we can understand and start to learn why certain people aren't taking trades, why certain people aren't in the market at certain times, and how we can begin to not be in the market at certain times, how we can replicate that, right? Because I want to be able to replicate those profitable traders. I want to be able to replicate those people out there, right, that are making it in this game and that actually understand what they are doing, right, and are starting to show that behavior and show that profitability over time, right? That is what is most important to me as far as how this goes. Meaning, if you want consistency, right, don't sway from your rules. Do not sway from your rules. If you find more rules, add on the rules, right? Do not sway from your rules if you want consistency, because this is going to allow you to now know what your strengths and weaknesses are. Meaning, you can go back to your journals, go back to your journal trades and say, okay, I've lost 10 trades on gold and all of my winning trades have been on NQ. So why am I trading gold? Right? This is what I'm comfortable with. I'm comfortable with NQ. I make most of my money on NQ. My setup makes sense on NQ, right? Everything comes into play on NQ. So why am I literally trading gold? There is no need, right? We need to find what is profitable for us, what we can use for our advantage and for to allow that comfortability, right? To allow the ability to look at the charts and not get a swayed bias, or not get FOMO, or not get these certain scenarios that every single trader goes through, right? Humans go through it. We're emotional. That's just how it is. It is human nature. So if we can instead compartmentalize, right, and organize our thoughts and our emotions into either positive outlook, right, positive feedback, or get into these scenarios where we don't take too many trades and overtrade, right? I actually saw this interview. I think it was think it was like 2 days ago or something like that. But I saw this interview. I think it was Alex GFX and Raj Banks. If you guys heard of Q Banks, Raj Banks trades with him. But anyway, he was talking about his story, right? His journey as he was coming up or whatever. And during the time, he said that he didn't really have a trading mentor, right? Somebody that he could go to specifically for trading, for his emotions, so he could get those infigured, right? So he said he had a virtual psychologist that he would talk to, and the psychologist told him, and he said that the human mind, right, every single day, so every 24-hour span period, can physically only produce and handle 1 to 2 emotional decisions. Investing is an emotional decision. So if you've taken 1 to 2 trades, 1 to 3 trades, right, and you've lost all 3 of those trades or lost 2 of them, why are you trying to take more trades, right? At this point, it's irrational to take trades to find a bias, because now all of a sudden you're frustrated, you're discouraged, right? And you've made your emotional decision for that day and time. So if we can now get to this point to where you can limit yourself, meaning discipline yourself. You don't need to be on the charts if you're not trading, right? Unless you're backtesting, whatever it is. But you don't need to be on the charts 24/7. Try to limit it as much as possible to allow the ability that now every morning or every night that you look to play the charts, right, at a certain time, you're looking for the same thing over and over again. If it's to the upside, right, you look for the W. If it's to the downside, you look for the M, right? It's the same exact scenario, following the liquidity rate, right, following those manipulations on certain session times, because now this is going to allow you the ability to make it a job, right? Now you're coming to the charts every single day. I love you too, Anonymous Bread. You're my dog. Love you, man. But yeah, man, come to the charts every single day. That's how it goes. It's going to be a job now. Now you have the ability to go do things during the day. You don't have to worry about the charts. You don't have to check your phone, right, while you're out with your family, out with your wife, kids, whatever it is. You don't have to go ahead and allow trading to now take over your life. You are taking control of the charts now. You are taking control of your analysis. You are taking control of your profits, your discipline, your risk management. You have now taken control of all of those, right? You have a routine now. You've made it a job. And now you have all of this time during the day to do whatever you want to do, because that is what trading is for. I came into trading for time freedom. Okay. I wanted to be able to make as much as I could, right? In the least amount of time that I could, to allow me to do what I wanted to do during the week, right? Whether it's personally, I'm studying cybersecurity, right? Or hobbies, other things, other business ventures that you're trying to get into, you now have the ability to do that, right? And with trading, that's going to be very, very important, because I guarantee you there's a lot of scenarios where, if you guys are working on your trading or not, if you're brand new, it's completely fine. But I guarantee you, if there's a lot of scenarios that you yourself have made profits in the morning, during the day, right, on your session time with your pair, and then the second half of the day you end up losing those profits and even going into drawdown because you've been on the charts for too long, right? And then you sit there and you're like, all this work that I did, what was it for? My style of analysis is not right, right? So you go to YouTube, you're like, you're looking at ICT, right? How is this working? How is this not working? This doesn't make any sense, right? And now you have all of this emotional buildup of, I'm not doing it right. I'm not doing it right. I'm not doing it right. You don't need to be right, okay? You do not have to be right. Don't be afraid to fail, okay? Do not be afraid to lose, because that is going to happen. It is a part of the game. If losses weren't a thing, right, then we wouldn't be trading. We would not be trading. Um, it's just as simple as it is, as far as these concepts, these right, these strategies, all these things that you see on YouTube. It's going to come down, to the end of the day, to your psychological analysis, to your ability to read yourself and your emotions within yourself, how you decide to take any trades, or how you decide to invest, right? That is going to be what's most important at the end of the day. So once you have found that edge, right? Once you have found that system that you can profit off of, then work on that psychology to allow that system to give you the results that you are looking for, right? That was just a quick little thing on the understanding of the human mind, right? Emotions. I've been reading a lot of psychotecture, right, and psychological books lately, and it's just been helping a lot with emotions, right? With just understanding why I make decisions or why I don't make decisions, because now that's allowed me to control those emotions, right? No one can physically just put them away, right? Because what happens when you put them away? They get bottled up, right? And they explode. And they explode, right? They get bottled up and they explode. That's what happens, right? If you're mad at your girlfriend, wife, husband, whatever it is, right? You're very mad at them, but you don't say anything to them because you like them or you don't want them to get mad. And then it goes up to that one point, right, where you just snap and then all of a sudden everything blows up. Same exact thing is going to happen right here, right? If you just try to put away your emotions, just put them to the side and not worry about them, yeah, you might get that little winning streak, but then that one day that you lose, then you're over trading. Then you just lost your entire port, right? Because now you're like, oh, I got to make that back. I got to make that back. I got to do this. Got to do that, right? And then you get super, super frustrated and super discouraged. But if now we can allow ourselves to come to the charts every single day at the same time, right? Look for the same setups, then we can start to gain that profitability. See what Anonymous Bread said. Oh, I love it, man. Love it, man. Playbit forever. Yes, sir. Yes, sir. But yeah, man, it's just these scenarios like this where we can begin to utilize much more patience. We can begin to utilize much more confidence in ourselves, right? In our abilities, because now we are leaving it up to speculation. We understand that the market is going to move how the market is going to move, right? We are just looking for our setup, and that is it. Trusting ourselves, right? Trusting the system that we have put in place, the step-by-step system that we have done countless hours of work on, right? And once that is done, now you have the psychological side. That is what is going to bring you past those levels, right? Past your peers that you want to be at the top, right? That is you, because you have now gained the ability to control your emotions versus hide them or trade emotionally, right? You have made the decision to control yourself. And with that, you can now control your portfolio, right? It's as simple as it is. If you're not right in the head, right, then you won't be able to trade. That's just as simple as it is. You got to have that clarity, that confidence, that ability to be that machine, right? As the algorithm is, because that's who we are trading with. We are trading with the algorithm. So if we need to be that machine as the algorithm is, then how are we going to make any profits if we're FOMOing or taking trades out because we're scared, right, that we're going to lose, whatever it is? How are we going to be able to do that? We're not, right? I wanted to understand too. This was something that I had heard. A lot of people say this may be wrong or right. I don't really care about the agreements on this certain statement, right? But it has helped me personally, and that is thinking about the money as it is gone before it's even in that position, right? So let's say you're risking 0.5% on a certain position. You want to take it to the upside, to the downside, whatever it is, right? And you're trying to make a 4-to-1 R&R, and you're risking 0.5%. Right? So at this point in time, you're like, oh, I want to take this to the upside. I'm risking 4-to-1 R&R, right? I'm risking 0.5%. So how can I kind of get that out of my head, right? That I am not risking that 0.5%. Well, it's gone already. That's as easy as it was for me to be able to allow for clarity, right? And allow for simplicity when I was looking for certain trades and looking or not getting scared to lose, right? Because now I already think it is gone. I already think that position as a position that was stopped out. But then when it goes in my way, right, goes into profits, then I am good to go. These are these certain scenarios where we can just begin to find those little ticks, right? Those little things that we do that we don't understand that we do, and then it just repeats over and over again, and then we're like, wait, I was doing that, right? Take that, write it down. Write it down. So now when you go to the charts every single time, you look at your written notes and you say, oh, I've been doing this, or oh, I've been doing that. I'm going to avoid it this time, right? Because now that gives the ability for us to grow. We're not going to grow if we're doing the same thing over and over again, the quote unquote wrong way, right? If we're not gaining any sort of profitability because we're FOMOing or FUDing, whatever it is, right? We need to start to give ourselves the ability to show that. So with that being said, that was pretty much everything I had for you guys today. We still have 10 minutes or so, so if you guys have any questions, feel free to unmute your mics. If you guys want me to look at any charts, I can do that as well. If not, I wanted to go look at ETH. We can go look at what she's doing, right? What's going on within these scenarios right here, and we'll talk about why I thought this move to be right here was true. You guys can go ahead and put those out now. We'll go ahead and take a look at those. About a minute or so. XRP. Oh yes, sir. We gotta hit my boy Sir Trades a lot. Let's go to this one. I believe it was this chart. Yep. Okay, cool. Wow, XRP looks good. XRP looks really good. So sentiment played out perfectly. Right, we were talking about on the daily chart. When we were within these areas, I was saying if we were to see upside, then we would want to see delivery into these lower areas, right? Institutional candles filling fair value gaps, taking out the long liquidity that we could see was built on this move right here. Once we did that on the daily chart, we broke structure to the upside right here with this impulsive move. We can see that we then mitigated the daily candle before candle that did that, came back down into that area, and then from that we had the following expansion up into these areas. So if we look on a weekly time frame, weekly is bullish. Weekly is very, very bullish at this point in time. If we can create a higher low within these areas, this was your high that caused the low. Okay, so this highest high was what caused this lowest low right here. So I'd want to see these areas taken out to the upside, but on our higher time frames, do believe the daily. Okay, so if our daily can close up within these areas and not just show a wick and then move to the downside, then I would like this a lot more than if we were to see a wick right up into these areas and then possible continuation to the downside. But overall, right, if this was a redistribution, we would want to look for the highs to get ran, price to come back into an area of supply. We can see this clean drop base drop. Draw this out like this. Right, clean area of supply for price to come into overall. We saw the break of structure to the upside. So if on my daily time frame I was looking for my next possible area to take this to the upside, I would look for my most recent structure. We can see we came down into this area, broke up again, right? We have our fair value gap or imbalance, whatever you want to call that. We came down into that area, we filled that, mitigated it, and then we saw the move to the upside following. So we can see the higher high, higher low, higher high, higher low, continuation to the upside, right? So with that being said, let's go to a lower time frame. Then 12 hours, same exact thing. We are just starting to push up into these areas, so this could definitely be an accumulation to distribution, but I would want to see all of the highs ran, personally. Something like this. Right, taking out these highs, coming up into areas of supply, mitigating supply points, and then breaking structure to the downside. So at this point in time, I would wait for a daily structure point or a daily candle to close, about 8 minutes, right? And then I would look for the most recent range that we have created. So on the 4 hour, we can see that this was our most recent low that caused this most recent high. We saw a internal possible break of structure to the downside here. But I'm looking at this low to this high, right? This is the lowest low that caused this highest high. Let's go ahead and get rid of these. It will allow me to. Perfect. Okay. So our lowest low that caused this highest high is here, right? Our most recent internal structure lies from this low to this high right here. So we can draw that out like this. All right, we now have two areas of premium and discount, so I'm going to go ahead and take away the higher one first, and we'll talk about our most recent structure within here. We're starting to leave lows. Doesn't look like we're manipulating highs too much yet. I would wait for price to come down into areas of demand, right? Down here at 0.3890. Look for 15-minute confirmation within these areas, or even hourly, because if the hourly were to move downside here, we could see a break of structure to the downside on the hourly. That would put in a 4-hour pullback right into areas of demand that had sponsored this move to the upside. Something I've noticed with XRP, she really, really loves institutional candles. She likes to come and mitigate them a lot. Come back down to those institutional candles, liquidate all traders, and then move to the upside. Similar scenario over here. Go to a higher time frame. Institutional candle before the break of structure to the upside, came back down, mitigated that, and then saw that push overall. This would be your order block, right? Your candle before that candle that broke that structure point to the upside. But within this point in time, within this certain range, I would look for more structure within areas of discount, within areas of demand, to look to take this to next. And then you would first target would be that weak high, right? And then once that weak high is taken out, right? So if you get the confirmation within these areas, meaning it comes down into here, break structure to the upside right here, you have your entry, right here. and you're looking to continuously take this to the upside, your first take profit is going to lie at this week high right here. Why? Because this high did not cause a new low. So this high is a high that we can look to get taken out, right? So once that is happening, and once that high is taken out, right, then you can now look for those higher time frame areas of supply and demand. Obviously, this is still a higher time frame play, but this is the setup that we are looking for every single time. Impulsive move, right? Confirmation of that, and then we take out the week high or the week low that is available. To the downside, it looks something like this, right? We break structure. We look for the confirmation within our zones. Here's our zone. We look for the confirmation, entry, right? That's given. And then we take structure to the downside. Our week low is right here. That's our first week low. That's our first take profit. Our overall take profit would lie at possible areas of demand if this was a break of structure to the upside, right? One impulsive move to the upside, so this was counter trend. Would lie next at demand, or then the overall week low within this scenario if the entire thing was bearish. But at these points in time, right, we can just understand that it's literally the same thing over and over again. On every single chart that I've shown you, right, on every single area that I've looked for, or a chart that I've looked for, play that I've looked for, SPY downside upside after JPEL tomorrow. Yes, definitely. I can do SPY real quick, actually. I don't know if Worldwide is here. Oh, no, he is here. Cool, cool, cool. Yeah, so let's look at SPY real quick. US, I got it on this other one. I have US 500. I know ES is a lot cleaner, but I personally have 500. We'll talk about up-down as well for US 500. Very, very similar to my Dow analysis. I do believe Dow is king over SPY and NASDAQ. Personally, it's been around longer, right? Just more money available within it. So I look to play Dow, right? And then my directional analysis on other indices is going to be based off of Dow. But I also look at NQ, right, and US 500 for possible setups. But looking at where we are at right now, right, we can see this move to the downside right here, this rally base rally that broke structure to the upside, saw our move to the upside. So to look for the confirmation within those areas, same exact thing with Dow, right? If we can come down into these areas, this is a daily chart. This looks like a daily fair value gap as well that we have formed right here. Here's our lowest low that caused this highest high. Let's go ahead and look if it's a bearish candle. Do believe it is. So institutional candle, very, very good as well within these areas. I do like this zone. And then we are, yeah, it looks like we're creating some equal lows within these areas as well. Yeah, this is clean. Okay, so I do like how this is starting to look, meaning that we're creating equal lows right before an area of demand, right? We can see that imbalance that was given right here as well. So if we can take out those equal lows, fill that imbalance, mitigate areas of demand, then break structure to the upside, I will look for something like this, right? For the continuation to the upside, meaning I would look for price to come into the area of demand, liquidate lows, then break structure to the upside, create new demand, right? Liquidate internal lows, break structure to the upside, and then you could look for that double break, right, on that confirmation of this move to the upside right here to take it overall upside. But if we come into this scenario right here, right, on our daily chart, we're still showing bearish structure. On our 12-hour chart, possible bullish structure being put in place, but as you can see, this high caused this low right here. It does look like we just liquidated that low. Yeah, we just liquidated those lows right here. Possible relief pump, maybe taking out these highs, coming up into this area, filling fair value or imbalances, and then continuing to the downside. But overall, I'm still looking for the delivery into this area of demand. On US 30, we are mitigating this area of demand as well, but if we can take out these lows, then break structure, it'll be the same exact scenario. So with both SPY and US 30, I am looking for a little bit more downside before upside, because obviously that upside is not being shown as of yet. I'll go ahead and look at other mentions as well. I don't think I have any other questions or anything like that. I was looking at stream chat. We did XRP. We looked at SPY as well. This was recorded. Tesla. Okay, okay. Let's take a look at Tesla. Lovely, lovely. Okay. Tesla, very, very interesting chart. Stock charts, spotty charts, right? I personally don't like to trade stocks, but these concepts apply to stocks, and I will go ahead and show you how that makes sense right here, right? So if we're looking at a weekly chart, we can see that this high caused this internal low right here. We came up into areas. We are possibly mitigating areas of supply. From the breakdown, we can see we created a lower low, lower high, continuation to the downside. So I do like this area. It's 324 area as a possible area of supply. If we could take these highs right here, once that occurs, right? This high, sorry, right here. We could take this high right here. We can see a mitigation of that. We can see this gap that we have left right here as well come into that, fill that, take out all the shorts, and then if we look for a break of structure to the downside on the daily chart, then I would look for a downside overall. But right now, you can see that we came down into areas of demand, right? Let's look for our first break of structure. Created a high, low, break right here. So we had our first break of structure to the upside. Came down into the candle before the candle that had caused that. Right, once we had done that, we broke structure to the upside with this move right here. So our next break came here. There's the confirmation. Candle before that candle. Perfect delivery right into that zone. So let's bring us back here. Perfect delivery into that zone. New high is formed. Came back down into those areas. Broke structure, more structure points to the upside, right? And then we had this move right here. Came back down, broke structure points to the upside. So our next area of demand, right, on the daily chart was lying here. I will jot out as this candle. And you can see that we came down into discount, liquidated these lows, and then broke that structure point to the upside. So the daily is still showing bullish, higher highs and higher lows. We can go to a 12-hour chart, still showing higher highs and higher lows as we are coming into these areas. So I would look for highs to be taken out, supply to be mitigated within these 325 areas, and then the move to the downside. Obviously, I like to play a higher time frame, so I'm going to wait until that higher time frame comes into action. But right now, right, from this delivery into these lows right here, and from the break that we had right here, I'm still looking bullish overall. We do have a possible pin bar being put, right? But until we take out this high, I'm not going to be looking for much downside as far as Tesla goes. That's what I have for Tesla. We're doing some stocks. Love it. We did DXY, XAU, not USD JPY. We did ETH, Bitcoin, US 30, SPY. If there is anything else, feel free to let me know right now. If not, then I will go ahead and end it for the day here. We'll go ahead and get into our next one. Right, this Thursday, we'll talk about sentiments and everything we are looking for. It'll be more of a psychological stream as before. But with these setups that we were looking at today, with the ones that are going to come into fruition, you guys will be updated either in lessons or in the posts, right? I believe it's crypto trades now. That will be sending those out, and I will get you those set. So with that being said, again, thanks everybody who had come out. Thanks everybody who had sat here, listened to me ramble, right? Trying to get some better information and trying to better yourselves as a trader. Just you sitting here for an hour on a Tuesday night has now put you past 90% of traders who won't even watch a 20-minute video. Think about that, right? If they can't even watch that 20-minute video, or they can't sit here and try to learn, right? Try to gain some knowledge, then can they even have that patience to trade? You know what I'm saying? Can you even hold? Or can you even enter positions because you're too scared to put yourself out there, right? Just go do it. But yeah, thanks again, everybody. Thanks again, Anonymous Bread. You have an awesome night as well, brother. I hope all you guys have a great rest of your day and or night. And I will catch you all later. This stream was recorded. This will be posted. If you guys have any other questions or anything that I might have missed, just feel free to just at me, and then I'll just go ahead and get that figured out. DM me, all good. But yeah, thanks again, everybody, and I will catch you all later.